Okay, guys, we're going to do our work together for 2-3. The first thing I want to do is up here emphasize again debit and credit parts and normal balance parts for these new accounts that we're going to be using. So any expense account, we're going to have a debit on the left, credit on the right, and expense accounts have a normal balance on the debit side, which means the debit side is the increasing side. For sales accounts, we have a debit on the left, a credit on the right. Sales accounts have a normal balance on the credit side, meaning the credit side is the increasing side. And drawing accounts have a debit on the left, credit on the right, and drawing accounts have a normal balance on the debit side, meaning that the debit side is the increasing side. Okay, so these are the new accounts that we're going to be working with. Okay, so we have our T accounts down here. We have our transactions up here. The first thing with our T accounts, let's label everything to make sure it's easy. So cash, we've got debit over here. Credit, cash has a normal balance on the debit side. Accounts receivable, we have a debit, credit, and accounts receivable is an asset, so it has a normal balance on the debit side. Supplies, debit, credit, and supplies has a normal balance on the debit side. Why some of this is turning red, I have no idea. Okay, Johnson drawing. So a drawing account, the left side is the debit, the right side is the credit, and drawing accounts have a normal balance on the debit side. Accounts payable, got debit and credit. Whoops, spelled that wrong. And then accounts payable have a normal balance on the credit side. Our Johnson Capital account will have debit, credit, and the Johnson Capital account has a normal balance on the credit side. Okay, coming down here, we've got a few more accounts. Sales, we have a debit and credit, and sales has a normal balance on the credit side. Rent expense, debit, credit, and expenses have a normal balance on the debit side. And then we have utilities expense, debit, credit, and again, expenses have a normal balance on the debit side. Now, do we have any more than that? No. Okay, so these are our T accounts that we're going to be using now. So first, June 1st, bought supplies on account from Supply Depot. So we're buying supplies on account. So our supplies is going to increase. Okay, so our supplies is going to increase. So we're going to have June 1st. Supplies is increasing, so that the increase goes on the normal balance side, and that's $500. Again, we don't have to use pluses and minuses here because it's just either a debit or a credit. But we also need to use our accounts payable Supply Depot account. So June 1st, we're increasing the amount that we owe them. So that's going to go on the credit side of the accounts payable Supply Depot account. Okay, June 2nd, we received cash from sales. So we're receiving cash. We're going to go over here to our cash, June 2nd, and if we're increasing cash, then that's going to go on the debit side for cash. So we have $2,500. We're going to go to sales, June 2nd, and we are also increasing our sales, and sales has a normal balance on the credit side, so it increases on the credit side. Okay, June 3rd, sold services on account to ABC Corp. Sold services on account to ABC Corp. Okay, so ABC Corp now owes us money. We need to increase the balance in which they owe us. So June 3rd, that's going to go on the debit side. They are increasing the amount they owe us by $1,500. This is also going to go, am I right? Is that $1,500? Sorry, $800. We sold services for $800 to them. This is also going to increase our sales. So we have June 3rd, and we're increasing our sales by $800. Okay, June 4th, received cash from sales. Okay, so June 4th, we received cash from sales. That means our cash is increasing, so that's going to be on the debit side. Our sales is also increasing. That's going to be on the credit side. And again, debits equal credits. If you do something to the debit side, you got to do something to the credit side. June 5th, sold services on account to ABC Corp. So June 5th, increasing the amount that ABC Corp owes us, $1,500. Also going to increase our sales, $1,500. June 6th, we're paying cash for a telephone bill, $250. So June 6th, and if we're paying cash, it means our cash is decreasing, so that's going to go on the credit side. And then telephone bill is a utilities expense. So we are going to go down here to utilities expense. We've got June 6th. And utilities expense is increasing, and expenses increase on the debit side. So we're going to put that $250 here on the credit side. Okay, June 7th, sold services on account to ABC Corp. Okay, so ABC Corp owes us more money again. So June 7th, we sold $750 to them. This is also going to increase our sales. So June 7th, $750. June 8th, paid cash to the owner for personal use. So that's going to decrease our cash if we're paying cash to the owner. So June 8th, we're decreasing cash, so that goes on the credit side for cash. So we're also going to be using our Johnson drawing account. Okay, so June 8th, and the drawing account has a normal balance on the debit side. We're increasing the amount that the owner has drawn or taken out. So that's going to be a debit for Johnson drawing. June 9th, we received cash on account from ABC Corp. So ABC Corp is making a payment to us. So we're receiving cash. So June 9th, which means our cash is increasing. So that is going to be a debit. And then we are also decreasing the amount that ABC Corp owes us. So that will be a credit for the accounts receivable ABC Corp account. And then our last one is June 10th. We're paying cash for rent. So we're paying cash. Our cash is decreasing. So that's going to go over here on the credit side. And then we also need to go down to our rent expense. June 10th, rent expense. The amount of rent expense is going up. So that's going to go on the normal balance side for the rent expense, which is the debit side, $600. Okay, you now need to go and do your on your own for 2-3. Thanks.